Hello everybody and welcome. This is Tushar Chande. Given the strong sell-off in the mega cap stocks this week, this is the perfect time to discuss how to handle volatility in the markets. So let's get started. A gentle reminder, there's risk of loss in trading and no technical approach is always perfect. Handling volatility is always difficult and you have to be ready for it ahead of time. There are two broad approaches. You can ignore it and just hold on to your portfolio as an investor, or you can shorten your time frame to accelerate your trading decisions as a trader. This is a chart of QQQ. The basic problem we have is we don't know when the reversal would occur and we don't know the depth and duration of the reversal. So for example, here we are in a pretty much in an uptrend and then a strong reversal here near the high, but how do we know where it's going to go? So we just need to have a technical strategy, and let me show you a few. For the remainder of the slides, I will use hourly data to shrink the time frame and exactly the same parameter set for all of the charts. So the fully automatic moving average will be set to a 50 bar length with a 5 to 10 period offset. One means we are using 100 bar ATR bands set to plus or minus 3 units. The Chande Kroll exit will use the highest high of 12 bars with a 12 bar look back, a 4 bar multiple, and a 12 bar highest high for the trailing stop. The PALS or the parabolic accelerating long stop will use 10 bar high to get started, the 20 bar low as the starting point for the value, and 1 is a nominal speed. And the CHATS indicator, the Chande absolute trend strength, has no parameters, and the multi-period momentum has no parameters. This is the QQQ hourly chart with the FEMA moving average. You can see that whenever we get a breakout outside the bands, the CHATS indicator is at plus 100 and it's above 75, which is why we're getting green bars. And the traditional approach here would be to exit on the 50 bar moving average. So for example, you could be long here and exit there, or here we wouldn't take it because we've not reached the green region, and then a breakout here, you would exit there. So you would have exited after the high of the move, but you would have avoided the rest of the decline. Here we have the QQQ hourly chart with the Chande Kroll exit. The green bar means we're long and would have exited much closer to the eventual high of the move and avoided the rest of the downtrend. And of course here we would have exited somewhere in this area. So again, the Chande Kroll exit would have provided timely exits out of QQQ. Again, the QQQ hourly chart with the parabolic accelerating exit. The primary uptrend here would have given us a very nice exit on the first strong bar decline. So you see that we've gone higher and higher, or closer and closer to the reversal point for the exit. And of course, we would have had two additional exits over here. This is the SPY hourly chart for the S&P 500 index. Green bar's trend is higher, exit on the 50 bar moving average. A false breakout here, and if you had taken this breakout, you would have been stopped out there, but we didn't quite reach 100. We reached 100 here in this area. Follow the trend, exit over there, avoid this decline. Hourly SPY with the Chande Kroll exit. This is the main trend we're talking about. Get stopped out there, possibly long again, stopped out there, avoid the decline. And of course, in this move up here, we would have been perhaps long from there and then exited over there. SPY hourly with the TC PALS exit. Main trend here, exited there, would have had to re-enter and exit there. And again, this would have given us multiple exits in the prior uptrend. This is hourly chart for Tesla. The CHATS indicator reaches 100 in this area. We're long, follow the trend up and exit there with the 50 bar moving average. So the hourly Tesla chart again with the Chande Kroll exit. This is the generator. You're long, follow the trend up and exit on this reversal above the 50 bar moving average. So the hourly Tesla chart with the PALS exit, which works particularly well. We get the breakout, confirmation, initial stop out, continue, beautiful exit, 1 bar from the absolute high of the move, and then these we ignore because we never get above 75. This is the Microsoft hourly chart, uptrend, keep going, get stopped out here. If you go long again, you get stopped out there, and then you avoid this entire decline. So the Microsoft uptrend on the hourly chart, a little choppy for this exit with the default values. So we would have had multiple exits if we had taken this particular approach, but we would have avoided the decline. And finally, the Microsoft hourly with the bounce exit. And again, you see that the choppy uptrend means that you had multiple entries and exits, but you would have avoided the main downtrend because chats was never above 75 during this down move. And then finally, Google hourly data, chats above 90, close to 100. You could have gone long here, been stopped out there, gone long out there, stopped out here, but you would have completely avoided the meltdown as well as the big sell-off after earnings, simply because chats never got above 75 during this entire down move. So I hope that gives you some idea about how you can shorten a time frame to change how you interact with the market. I hope you like and subscribe. The tools I use are at TrendSpider.com.